Assalamualaikum, good day and greetings Dr. Fajar and my dear friends. In this presentation video, our group would like to present about the financial issue currency hegemony. First of all, I would like to introduce the group members. Myself, Arsikin. Next we have Fatin Mardhiyah, Nurul Izzati, Vivi, Kaur and Amiruddin. Now, we'll move to the table of contents. We have 1.0 introduction, 2.0 background study, 3.0 theoretical approach, which is Literalism Theory, 4.0 Literature Review, 5.0 Analysis and Discussion, which is the factors that affecting the rise of USD and China's Yuan. And last but not least, 6.0 Conclusion.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Amiruddin bin Muhammad. My matric number is 288774. I will begin the introduction part for our finding in our assignment, currency hegemony, USD versus Yuan. First and foremost, in the globalization era, people use the currency as a tool to get what they need. Get a certain goods or certain item and commodities, they have to have the money or they have to have the currency to buy it. Back then, in our ancient time, people used barter system. They exchange directly one item to one item to get the item that they desire. And currently, hegemony refers to the Greek word hegemonia, meaning that the ability to lead or rules. By the Oxford Bibliography, the hegemonia refer to the power by the state that can determine other state non-coercively or by coercive power. Currently, the USD, United States dollar, have been in the power back for 8 decades. There are several factors why the USD currently become the world reserve currency, but then it was being challenged by the China and Russia. So the terms of dethrone the USD comes in place and new challenge to USD. Alright, on the next part, I will explain about the background of the studies. The first and foremost, the United States dollar. Firstly, the United States dollar is powerful because of several factors. It can be traced in our history because after the World War I broke in 1914, many countries discontinued the gold standards and their expenses using the currency were paid by US dollar to fund their military actions. After World War II, many countries looked up to the United States because the United States was the strong and wealthy country, and the United States assists other countries by providing money and resources to help them rebuild after the war. This policy made the other actors to trust USD more and more. Secondly, the Bretton Woods Agreement was established by the United States and as the world reserve currency, so people use USD to trade in the international political economy. Moreover, the dollar is the primary currency and most significant in international agencies, including the IMF. So on the next part, we will talk about the Chinese Yuan renminbi. This is the currency that was used in Chinese mainland. The official name is renminbi, and the other hand, Yuan is represent the financial units of its currency. 2018, the President Trump imposed tariff on China goods and as labeling China a currency manipulator back then. So China retaliated this action of Trump by imposing taxes and tariff toward American goods. So by both governments to ensure their wealth and security is secure. In 2016, the IMF included the Chinese Yuan renminbi as one of the basket currency. Besides, we have to know about the BRICS. What is BRICS? BRICS is up. So first country is Brazil, Russia, India, China, and South Africa. BRICS organization and partnership promotes and discuss about their economic cooperation, global insurance, and being optimistic to their own economic growth. The BRICS is a platform of intergovernmental cooperation similar to the G7 countries. So we already have IMF, but then the BRICS cooperation come up with new idea, the new development banks. Nowadays, the BRICS has expanded their dominancy and supremacy in international market and openly considering to have new members. So they would like to have a BRIC plus. The BRIC plus usually will come to the Yuan currency as their own currency in trading goods. Next, we will move on to the BRI strategy. BRI refers to Belt Road Initiative that was President Xi Jinping idea back in 2013. It was also been known as OBOR, One Belt, One Road initiative by the China government. This is one to promote the China supremacy in the East Asia, Europe through physical infrastructure. The project idea involved in building an extensive system in roads, transport, power grids, oil and gas pipeline, and other infrastructure projects. Now, this is the OPEC efforts. So, OPEC is the organization and petroleum exporting countries. There is a multinational organization that oversees petroleum production, supplies, and prices. The organization that was being found in 1960, there are 13 major production firms of oil production such as Iraq, Iran, Kuwait come together, and this is the one that established the OPEC. In 2016, the OPEC Plus was introduced, and one of the OPEC Plus country is Russia. After the sanction of United States toward Russia, Russia currently cooperatively joining the OPEC Plus, and the OPEC Plus impact the use of money transaction to buying oil in the USD prices.
Okay, hi, hello, my name is Vivi Ramday. My matrix number is 287779, and I will be talking about the theoretical approach. So, as you can see for the first point here, China, in fact, as far as the early 2000s, moved away from the US dollar with hopes of internationalizing the Yuan currency. China's market, they are liberalized into making a more attractive investments towards other country, because the Chinese authorities, they allowed the more relaxed investment restriction for their capital markets. For the second point, in addition to that, before the able being of liberalizing the yuan, or rather the renminbi, RMB, there was capital control, which is the basis of the country's economic developments. So the logic here is that as long as the capital is in control, which is the People's Republic Banks of China, then there will be a restraint for the currency to get accepted by the international market. So in terms of how liberal China's market is that they are liberal, but because of the control from the capital, then it prevents the country from really reaching the goal to internationalizing the yuan currency.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Fatin Mardhiyah Binti Roslan, matrix number 287083. So I am going to proceed with the theoretical approach. To this issue, I think it can be classified to mercantilism approaches. Mercantilism briefly explained about the more wealth, the more power, where it was regulated by the government. There are two forms of economic rivalry in mercantilism, which is aggressive mercantilism and defensive mercantilism. I classified this issue in defensive mercantilism, which is a trade protection policy. Further explained can be seen in the book named The National System of Political Economy, where Frederick List explained that a nation's real wealth is its productive capacity, not the amount of the gold nations and the big businesses of the rich people have. So in my perspective, mercantilism established monopolies as an approach to get more power in international trade. Why mercantilism suits this issue? So, US led the world reserve currency in 1944. So, reserve currency refers to a currency that is accepted throughout the entire world for doing international trade. It also called the currency of trust, because of its safety, resiliency, and stability, where all countries agreed to do business since local currency could fluctuate significantly. However, we need to be conscious that reserve currency will never last forever. It also could change as if it's facing a downturn or drop and can be replaced to another currency after that. We know that the currency throne that the US holds has been challenged by China as it is aggressively trying to promote the use of its currency, which is Yuan, to settle cross-border trades as part of China's efforts to internationalize the use of its currency. Recently, China has been together with Brazil as well as the BRICS countries in the deal to de-dollarize the US dollars in their trades, as well as the BRI project, which is Belt and Road Initiative by China, where it gives loans to those countries who agreed to project agreement, but then China left the country with a tremendous debt and proposed to pay back with China's currency. So, as a result, China successfully made its currency has true cross-border threats. Since the sanctions imposed by Western power, allowing China to gain an even stronger influence in international trade. So China take this opportunity to gain power or monopoly the trade. Last but not least, the US dollar still makes up the vast majority of global transaction by far. United States is also in the efforts to maintain its status on the international economic stage to hold on as a country that dominates the world in any form, even though China is challenging and competing for the power they hold. That's all from me. Thank you.
My name is Nurul Izzati Binti Muhammad Jassri, metric number 2X7328. The monetary hegemon typically owned a national currency that served as the primary medium of exchange for international trade, the unit of account for the majority of important goods worldwide, and a store of value for the majority of other states. For example, around 64% of the world official foreign currency reserves are presently kept in US dollars, and over 88% of daily foreign exchange dealing include US dollars. The Chinese currency exchange rate has been a source of contention between the United States and China. The US side chastised China for manipulating the currency exchange rate, blaming it for trade imbalance and job losses in the US. The Chinese side denied that the claiming that strengthening the renminbi would not help settle the internal issues in the United States. Factors contributing to currency hegemony. The size and stability of a country's economy are important elements in evaluating the possibility for currency hegemony. Countries with big and stable economies have greater clout in global commerce and finance, making their currency more appealing for foreign transactions. Consequences of currency hegemony. The country with the dominant currency profit greatly from seigniorage. The dominant currency issuer may borrow in its own currency and perhaps earn interest on those borrowing, give it an advantage in terms of cheaper borrowing costs and more readily financing deficit. Challenges of currency hegemony. One of the policy consequences for countries wishing to oppose or adapt to currency hegemony is to promote internal economic stability and execute structural changes. Fiscal discipline, price stability and financial sector reform, among other things, can boost trust in countries' currency and attract international investors. In a nutshell, it might be difficult to obtain precise and trustworthy statistics on currency hegemony.
Hi, my name is Arsikin Azmi. My number matrix 286-132. Now, I will present about the factors that affect the rise of USD or Yuan at times. The factors that affect the hegemony of our currency are complex and multifaceted. In the case of the US dollar and the Chinese yuan, there are several factors that could impact their respective positions in the global financial system. One of the factors is economic strength. The economic strength of a country is a key determinant of the hegemony of its currency. The US has been the world's largest economy for several decades and has a highly developed financial system, which has contributed to the dominance of the US dollar. China, on the other hand, has experienced rapid economic growth over the past few decades and has become a major player in the global economy. However, the Chinese economy is still heavily reliant on exports, and the government has been working to transition towards a more consumer-driven economy. Next, political and geopolitical factors. Political and geopolitical factors can also influence the hegemony of a currency. The US dollar has been seen as a safe haven currency during times of geopolitical uncertainty, and the US government has used its economy and political power to maintain the dominance of the US dollar. China, on the other hand, has been working to increase the international use of the yuan and reduce its dependence on US dollar, with initiatives such as the Belt and Road Initiative and the establishment of the ASEAN Infrastructure Investment Bank. Third, monetary policy. Monetary policy can also impact the hegemony of the currency. The US Federal Reserve sets monetary policy for the US, and its decisions on interest rates and quantitative easing can affect the value of the US dollar. Meanwhile, China's central bank, the People's Bank of China, has been working to liberalize its financial system and make the yuan more flexible, but it still maintains tight control over the currency's value. Last but not least, technological advancements. The rise of new technologies such as blockchain and the cryptocurrencies could also impact the hegemony of traditional currencies like the US dollar and the yuan. For example, cryptocurrencies could provide an alternative to traditional currencies for international transactions, potentially reducing the dominance of the US dollar. In conclusion, the hegemony of the US dollar and the Chinese yuan is influenced by a complex array of factors, including economic strength, political and geopolitical factors, monetary policy, and technological advancements. While the US dollar is currently the dominant currency in the global financial system, China's rise as a major economic power and its effort to increase the international use of the yuan suggests that the balance of power could shift in the future. That's all from me. Thank you.
For this section, I will talk about how the currencies, the USD and the Chinese yuan, affect each other. So, if we are to look between both these currencies, we know that US have more freedom in converting their currencies, as they have such little to no restriction. But for a yuan, or rather the renminbi's case, the exchange rates are controlled and managed by the capital government. So as you can see here, for the first point, the demand for currency, China's central bank used a modified version, which happens to be a traditional exchange rate from the normal floating rate that many countries uses, including the United States. So here we know that the demand is really measured by the capital government. Another point on how the currencies affect each other, which is inflation. So as for China's case, the slowing of economy led to the US dollar regaining its strength. So as you can see here, state-run companies and banks have too much liquidity, and the economy itself has large amount of corporate debt. This causes tourists from China to invest in the US dollars, as it is considered to be a safe haven investment. So another incident for China is the fall of the stock market, which means that it can lead to a slow economic growth, so it will lead to a future inflation and furthermore collapse of the country. As for the US dollar, however, as you can see here, the government tends to increase the federal funds target rate. This raises the cost of credit, which increases the economy's wealth as the supply of money is reduced. So a good example for this is that, for instance, the cost of a chocolate that someone buy in the US today tends to be higher than it was a few years back. So meaning if you are to buy one item, let's say one item for $10 today, it will cost a bit more in a year or two, which really highlights that inflation is affecting the financial markets in the US.
conclusion, the US dollar and the Chinese yuan are two of the world's major reserve currencies, meaning they are widely held by the central bank and government as part of their foreign exchange reserve. Understanding the dynamic between these currencies can provide insights into global economic trends and international trade patterns. In summary, studying financial issues such as currency hegemony is important as it empowers individual businesses, policymakers, and societies to make informed financial decisions, manage risk, foster economic growth, and ensure the well-being of individuals and organizations. It promotes financial literacy, stability, and resilience in personal and economic contexts. That's all for our presentation. Thank you.